Good afternoon, I'm James Tetreault with your Southwest Ag Grain Market Update for December 6, 2017. So today we just wanted to touch base with you guys on the South American crop update and how that's going to affect the market as we move into the winter months. So the soybean market is showing a lot of similarities to the Montreal Canadian season. Just a few short weeks ago, like the Canadians, the soybean market wasn't performing and it didn't seem like there was going to be any immediate upside potential. Now, everything is starting to look up for both the Canadians and the soybean market. So yesterday, soybean futures rallied amid concerns with dryness in Argentina. However, the soybean market is taking back some of those gains from yesterday because the USDA announcement that it was correcting the amount of soybeans purchased by China. While some caution it's too early in the season to get overly excited, traders are nevertheless building weather premiums into these prices in response to the warm, dry forecasts that should further deplete soil moisture and slow planting efforts. But rains over the weekend were enough to at least delay a reduction in South American crop. So as we look towards planting, Brazilian producers have already planted 92% of the estimated area for soybeans in 2017, while Argentina sits at roughly 45%. So according to a few retailers down in South America, the 2017 soybean crop is doing fairly well. Input retailers are suggesting that sales are good thermometer to evaluate crop performance. And when the outlook is good, the producer opens up their wallet and invests more into the crop. So going into what we're hearing out there in the weather, the last event was the 2010-2012 La Nina, which included one of the strongest peaks on record. The nation activated a watch for this weather pattern back in October, with 7 out of the 8 international climate models suggesting that sea surface temperatures would reach La Nina levels by November. U.S. meteorologists declared La Nina a global weather phenomenon a couple of months ago and were officially joined by Australia's Bureau of Meteorology, who said the weather pattern has established itself in the Pacific Ocean. The forecasters, however, noted that this weather event will be brief and last only through the spring. So during a La Nina, the tropical Pacific Ocean cools, which can lead to droughts in South America, and it can also include some increased rainfall down in Australia. So why is this important to us? Well, that's because Brazil and Argentina, they're projected to produce about 165 million metric tons of beans, and that's versus the 120 million metric tons we've seen out of the U.S. in 2017. Now going back to why this is important to the marketplace. So January soybean futures, they settled above the $10 mark yesterday, turning that level into the near-term support. Yesterday's price action also took out the October highs, which leads us to our next resistant points in the January soybean market, with the February high of 1038, followed by the next resistant line of the last July 25th high of 1043. The 20 and 40-day moving averages are also both support levels, and those are in the 990 area. So the move back above the $10 level for the front month contract and Monday's highs also triggered some technical base buying, and the funds bought an estimated 9,500 soybean contracts, roughly about 47.5 million bushels. This has been your Southwest Ag Grain Market Update for December 6, 2017. I'm James Tetreault. Have a safe and happy harvest.